Hi, everybody. June 25th, the market update desk with Scott Riley, NMLS 157524. Also, June 25th is Senior Analyst Mr. Gibson's 13th birthday that he would have been. We know he's in heaven chasing after bunnies and playing with penguins and having endless treats. So we got some data today on new home sales that we want to break down more than just the headline and explain the depth of it. So new home sales showed a decline month over month of minus 13.7%. That's a pretty dramatic decline, even though we did have higher than normal sales last month. We'll break this down. Now, the median home sale price for new homes rose. I'm sorry, 4.3. I'm sorry, 3.3%. So that was on a positive news. Let's break down this home sales thing. So there were 507,000 new homes for sale. But when we look at it, of those, only 119,000 are actually completed and move-inable. We got 117,000 not even started yet. They're just air. And there were 271,000 homes still under construction. So we saw this big decrease in sales and rise in homes for sale, but you've got to really look through the numbers to understand the ones that are really for sale are the ones that are completed, which is only 119,000. So while it is a little bit of a surprise, it's not as big of a surprise as what the media is going to make that out to. So just with everything, headline is one thing, depth of facts is another thing. Um, when we looked at a chart, household formations, when we look back on an average, there's anywhere from 1.7 to 2 million new household formations every year. The new chart is showing that this year's probably going to be closer to 1.1 million household formations. That's the that's the amount of people looking to move out of maybe mom and dad's house, however that may be, and form a new household that needs a residence. Could be a home, could be an apartment. So there is definitely a dramatic drop in household formations. Now, that is definitely tied to affordability, interest rates, sales prices. So hopefully the Fed hears that, understands that, and doesn't take lagging information to start moving on the Fed funds rate, because that would have a dramatic effect on household formations. Mortgage applications for last week did decline 0.4% for purchases, but refinances were up 3% week over week. A lot of people go, why would I refinance my 3% rate? Well, because your rate and cost on all your other debt could be so much more on an interest carry perspective that it's costing you money not restructuring your mortgage to take care of all of your debt and having an overall lower global interest rate. We can crunch all those numbers for you and help you understand them. The market today, the technicals, mortgage-backed securities are down 5. 10-year treasury is up 2 basis points. Now, once again, I think it's the fourth time that we've bounced off resistance level of the 200-day moving average in the 10-year treasury. We hit it, bounced off of it the other day, and we're still, we couldn't close below it. So right now we're sitting at 4.3122. Now, as we move forward closer to Friday with PCE, we are a little concerned because the replacement value that's going to be dropping off in favor of this month is almost zero. So even if we get a 1/10 increase, we're going to see a rise month over month of PCE. But having the month over month of 0.1% is actually pretty good. It's just that we've got a very low replacement value. We'll break the numbers down to help you get pre-approved, work with your agents, use our knowledge, experience, and market relationships to help you. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Happy birthday in heaven, my buddy, Mr. Gibson. Thanks so much.